Afternoon, everybody. It's 2:20 on Thursday, February 15th. And I wanted to do sort of a bunch of instructional videos that'll help you understand both my methodology and, in this case specifically, why I made a trade. This is the silver chart, and anybody who's read my stuff for any period of time would know silver is one of my favorites. It goes with the gold, although not necessarily as exciting as the gold, but it often outperforms. And so we've had trade recommendations for a spread when we think that the silver is going to outperform, and that spread is short two silvers and, long two silvers and short one gold. That's a dollar amount. That's how it breaks down. And what happens is if the silver appreciates more than the gold does on a percentage basis, we make out well. We had one of these on last year, and it made about 200% over a 6 month period. So, as far as the methodology goes, I don't expect everybody to do the kind of work that I do or take the time, but that's why you pay me. What I like to do is I like to look at a long term picture. This is a 5 year weekly. And as you can see, I have drawn a couple of trend lines. The first one being off this low in here, which was $11.64. That's certainly a long way off. It is 100% off from where we are right now. And so I look at this and I see that the overall trend to me looks higher. So what do? I go from the long term context of identifying the trend and I back in a little and I start to see something that looks more like this. This is a 3 year. So we went from a 5 year to a 3 year, and we get a solid look here at what it looks like on a little shorter term basis, but certainly not a short term basis. So, what do we see here? Well, I see highs in this area around 26 and a half, and I see a series of higher lows. Here's the low. We could go back to the 5 year and it'd be 1164. Here's another low at 17.4. Here's another low. And these are all, when I say I want to look for the higher lows, I like to see a move and then a pullback. So here we had a pullback. So we went from 11 and change to 17 and change. Now we're at 20 and a half. We have another rally, a little bit of consolidation, comes back down, and we hit another higher low, which is 2085. Not a massive new low, not a massively higher low. This is 2050, 2085. Okay, so what am I looking at now? Well, I'm going to take it in another year. And here we have a blow up of that. So what do I see? I still see those highs where I drew this line. I still see these series of higher low, higher low, higher low, higher low, higher low, and this uptrend line coming off the last August, actually 2 years ago, August. And I see another rally up to the highs and a move down. Now, I look at this area and I see here is the low close. It was 2173. And I see the following week about unchanged to higher. We go another 4 weeks. We've had a little bit of a rally. And just so that you know, this rally off this low, let's call it a 21, not the bottom, but a 21. And we got to 22 and a half. That's at $50 a cent. So that's not a bad profit. We come back down, slightly higher low. Rally again to the high, come back down, slightly higher low. We don't really rally. We're just going sideways in here. We go from 22.87. The following week we close 22.79. So we're really not moving much. 22.59, and then this week we make a really minute lower low. This one is $21.97.5. We don't violate here, we don't violate the close, and in fact, we come right down to the trend line and we start up. So, how do we get into this trade? Well, we get into this trade by going to the daily. As you can see, the closer I am to wanting to make a trade, the shorter the term of the chart that I look at. So let's go here and we'll just take a quick look at the 6 month. And what do we have? We still have this trend line. We came right down to it and we closed on the high of the day. Now, we bought it closer to the low of the day as it was starting to move up and go through unchanged. So we got in on the basis of, let's call it 22 and a quarter. And we bought the next strike out at that point in time. We bought the next month's, the 15th of the month, the 20 calls. And that was done at a time where we were trading right around 20, and we paid 78 cents for them. We turned higher. We closed near the high of the day, and today we look a little bit higher yet. I'm very big on watching the higher high, higher low in these charts. As you can see, we didn't have that here. We had it here right up until we didn't. And when we made a lower high and a lower low, that would have been a signal for me that there's something of concern. But that was up at 24.40. The next day we were slightly higher, next day slightly higher, but closed lower. And basically we had to move from 24 and change to 22 and low change. So what are we looking for here? Well, it looks to me this purple line is the 5-day moving average. The blue line is the 20. There was a gentleman who I actually worked with 100 years ago named Dick Donchin at a company that was called Shearson Hayden Stone. In any event, he always said that the 5 and 20 crossing gives you a change in trend. And he's generally right. I mean, we crossed here up around $23.50. We went down, came back and made a lower high from here, came down again, tried it again, but closed on the low and continued down. So we had to move from, $24 down to $21. That's $150 on, actually it's $1,150 move in basically a week or so. Okay, so now we are higher high, higher low today. And my concern would be there are a bunch of closes in the silver itself around, let's just bring this in a little further, all of these closes, um, 23 and a quarter, 23.22, 23.17. See all of these closes. So that somewhat concerns me. And so I'll be watching to see if we can break. Now, if this continues to roll to the upside and crosses, we will essentially have a change in trend. But the point is that we bought it down here at a point where if it went just a little bit lower, I'm going to take it back out. If it went just a little bit lower, below maybe here, which is 2192 and a half, or here, 2229. If we went through that and closed at the bottom, I would have been very skeptical and would have closed out that position. But the fact is, it didn't. Those options are currently $1.19, and the SLV, which is the single ETF, not leveraged, um, is trading at 20.97. So the numbers don't line up exactly between the actual commodity and the ETF, but you get the general idea. So now we'll have to see if we can close a little higher today. We actually are very strong. I am very impressed by the action. But again, we're in an area of supply here. If we can close above, let's use this. This is 23 and a quarter. Let's see what that is. That's 23.24. Okay, so if we can close above 23 and a quarter, I would say we will try and test the 24 and a quarter area. And these options, we will have sold half of them anyway on the 100% up rule. We paid 78, so that would be $1.56. Take our money off the table and hope that we get something substantial like this. So there you go. That's why we're in the silver. That's how we got into it. And I'll keep my fingers crossed. Have a good afternoon.